When crypto is going down and so many projects are evaporating in fraud and bankruptcy, it is normal for some people to say, "I told you so." So far, the situations around the crypto market have crippled many expectations and predictions. The "I told you so" narrative is now the rave of the moment. Has anyone said that to you? The SEC is fast becoming one of the factors reinforcing this particular statement. Over the past decade, other than volatility, crypto has perhaps been best known for lawlessness. Mysterious cryptocurrency founders have vanished into thin air after pocketing millions from initial coin offerings, while hackers and scammers have had their fill, taking refuge in a financial Wild West enabled by the blockchain. With the severity of the situation, the US government is vying to make certain changes, but with the most painful strategies. America's biggest banking blowup since the 2008 financial crisis is propelling new headaches for crypto executives. The three banks that suddenly collapsed in early March serve the digital asset industry, and their downfalls have stoked concerns that crypto will be walled off from traditional finance. Regulators, including the Federal Reserve, have been cautioning lenders for months about the risk of dealing in digital assets. If banks are being told they can't bank the sector, then how does the sector create diversification and banking? The risk, unfortunately, was too few banks banking too big a sector. Dante Disparte, chief strategy officer at stablecoin issuer Circle, said, "The SEC has equally made a string of moves to fish out the bad players in the crypto industry. Many government officials have fueled the regulators' moves, thus giving them additional feathers to their cap. The activities of the SEC are gaining more ground, courtesy of their unrelenting actions." On March 22, 2023, the SEC issued a Wells notice to prominent cryptocurrency trading platform Coinbase, indicating that the regulator intends to bring charges against the company. The notice reportedly concentrated on Coinbase's staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet, one of the three that the company states is a technology that is not an exchange, broker, or centralized platform. According to Coinbase, the notice does not provide further information for the company to respond to. It remains confident in the legitimacy of its assets and services. It also wants more regulatory clarity from the SEC and a crypto framework to guide operators. Coinbase has until April 21, 2023 to respond to the allegations. Whether Coinbase is considered a technology and not an exchange or centralized platform is not the main issue. The SEC and other regulatory agencies are making joint efforts to stop known illegal activities that violate security laws, including fraudulent ICOs, Ponzi schemes, money laundering, and market manipulation. In addition, the SEC is working to find ways to shield investors from fraudulent or deceptive practices that occur on the blockchain, especially given the high risk and volatility of crypto. The SEC also plans to focus on providing greater clarity regarding the regulatory status of cryptocurrencies and related products, such as digital assets and initial coin offerings. There is also an appetite to ensure that crypto companies comply with existing security laws and regulations, including registration requirements and reporting obligations. Coinbase had earlier asked the SEC for reasonable crypto rules for Americans, but it turns out they got legal threats instead. The crypto exchange explained that although it does not take this development lightly, there is confidence in the way that it runs its business. Also, the SEC brought a slew of charges against Justin Sun, the man behind Tron and BitTorrent. As a longtime crypto investor, Mr. Sun recently tried to brand himself as a kind of crypto diplomat, working to stir the adoption of digital assets across the world. He has served as Grenda's representative up to the World Trade Organization, and he refers to himself as His Excellency on social media. However, according to the SEC's complaint, his companies, Tron Foundation, BitTorrent Foundation, and Rainberry, offered cryptocurrencies that were not properly registered. Mr. Sun also engaged in a manipulative trading practice that enforced the artificial appearance that his digital currencies were attracting strong investor interests. Now, this is where things start to get really interesting. The charges against Sun included the unregistered sale of crypto assets and wash trading, a form of fraud that involves buying and selling the same security to boost trading volumes. The allegations revealed that Sun generated over $30 million through illegal, unregistered offers and sales of the TRX token. The SEC also charged 8 influencers, including well-known personalities like Lindsay Lohan and Jake Paul, for promoting the cryptos on social media without disclosing that they were paid for it. Sun denied any wrongdoing, and the 6 of the celebrities decided to pay settlements of $400,000 each without admitting or denying the charges. This case demonstrates again the high risk investors face when crypto asset securities are offered and sold without proper disclosure, said SEC Chair Gary Gensler. The SEC said the celebrities Lindsay Lohan, Jake Paul, DeAndre Cortez Way, aka Soulja Boy, Austin Mahone, Michelle Mason, Miles Park McCollum, or Lil Yachty, Schaefer Smith, Neo, and Akon were specifically told not to disclose their payments for shilling the tokens. This case is just one of the myriad of charges the SEC has filed against the main players in the crypto industry in recent months. Outside the specific charges around Tron and BitTorrent, there is a wider issue for the crypto investors. The SEC considers many cryptos to be securities, and if that's the case, much of your crypto portfolio can be deemed as unregistered securities. This action from the SEC is similar to what happened to certain celebrities last year. The SEC announced charges against 8 individuals in a $100 million securities fraud scheme in which they used the social media platform Twitter and Discord to manipulate exchange-traded stocks. Since at least January 2020, some of the defendants promoted themselves as successful traders and cultivated a handful of followers on Twitter and in stock trading chat rooms on Discord. These 7 defendants allegedly purchased certain stocks and then encouraged their followers to buy those selected stocks by posting price targets or indicating that they were buying, holding, or adding to their stock position. However, as the complaint alleged, when share prices and trading volumes rose in the promoted securities, the individuals regularly sold their shares, disclosing their intentions to dump the securities while they were promoting them. As their complaint states, the defendants used social media to amass a large following of novice investors and then took advantage of their followers by repeatedly feeding them a steady diet of misinformation, which resulted in fraudulent profits of approximately $100 million, an expert said. But let's get back to the present. The SEC charges are the latest in a series of efforts to curb the misbehaviors of certain actors in the crypto industry. The crypto industry has faced mounting scrutiny in nearly 5 months since the implosion of FTX, the exchange founded by Sam Bankman-Fried. No one is going to survive this. So far this year, the SEC has levied fines and penalties against crypto lending firms and recently settled a case with Kraken, one of the largest American crypto exchanges. At the same time, federal banking regulators have expressed growing skepticism about crypto, raising the pressure on a freewheeling industry after a procession of bankruptcies and the market meltdowns over the last year. However, despite the heat of the moment, Ethereum's co-founder and crypto entrepreneur Joseph Lubin are certain that Ether won't be classified as a security in the United States. When asked in the event if Ethereum could be classified as a security in the US after Ethereum transitioned to a proof-of-stake consensus model, Lubin answered, "I think it is as likely and would have the same impact if Uber was made illegal. There will be a tremendous outcry from not just the crypto community, but different politicians and certain regulators," he added. In September of 2022, SEC Chair Gary Gensler pointed out that the blockchain's transition to proof-of-stake might have brought Ethereum under the regulator's beat. Gensler believes staking coins gave the investing public anticipation of profits based on their efforts of others. Lubin said he was privy to the discussions with the SEC and the Commodity Futures Trading Commission for many years. They thought back when everything was a security. I think, helped them to understand significantly that lots of tokens are not securities. And when they went away, Gary and the team now thinks that almost everything is a security. Lubin believes that Ethereum continues to be sufficiently decentralized and highlighted its many use cases that don't implicate it as a security. There is no centralized set of promoters or builders that is specifically trying to raise the value of Ether and enrich investors, he added. While everyone is trying to defend their various interests from little pieces of details they have, the SEC is ravaging the crypto industry to make it more stabilized and trusted. Many are against the idea, and some support it to a fault, but no one's opinions really matters. We have to let the government do their thing while we anticipate the results. But that's going to do it for today's video. Make sure you click on the subscribe notification button, and we'll see you in the next video.